Good evening from Mexico City and welcome everyone connected online now, as we are several people, I think close to 100 persons I'm seeing right now. I'm Carlos Serrano, I'm the program manager for the IFC Green Banking Academy, and I'm representing the International Finance Corporation, IFC in short, that as many of you might know, is the development bank from the World Bank Group that focuses in supporting the private sector in emerging markets across the world, where our investment, advisory services, and knowledge sharing work help banks, corporates, and enterprises from the private sector to create jobs, improve basic services and infrastructure, foster small enterprises, and more. At the center of our agenda is fighting with the global challenge of climate change. And we do this by supporting climate business and leveraging climate finance through our client banks and to the real sector. In the world, but in Latin America and Caribbean in particular, our financial institution team work hand by hand with commercial banks, regulators, and other actors across the region, accompanying them through the IFC Green Banking Academy in the transformational journey from business as usual toward green, sustainable, and responsible banking. A question to be addressed now is if the massive government funding that we are seeing being mobilized to counter the economic fallout of the pandemic will fuel the climate crisis, or will be employed to tackle both crises at the same time, and thus result in a healthier, cleaner, and more resilient economies. Ctrl+Alt+Delete Green Rebuild webinars of the IFC Green Banking Academy have to be with how to rebuild from the different sectors and views from the shock of COVID-19. Let me share some logistics about this webinar. It will last for 55 minutes from now on, and after introductions from our moderator, Peter Cushion, two senior representatives from IFC management team working on climate will be opening remarks for about 10 minutes, to be followed by an interactive discussion of 30 minutes led by our moderator, Peter Cushion. For the last 10 minutes, the panelists will reply to questions received from attendants to this webinar. And for this purpose, I kindly ask you to submit any question that you might have online at any time through our question and answer panels on your screen on WebEx on the right side. For posting the question on WebEx, you might find on the right side, as I mentioned, of the WebEx, the Q&A section, so you can write it down and post it there. And if you are using a mobile device, please look at the question and answer icon and post your question. We will be happy to answer to them. Finally, Peter will wrap up with some concluding remarks. And without further ado, let's jump into the agenda by presenting our moderator, Mr. Peter Cushion. Peter has a long career with IFC for 25 years, where he held a variety of responsibilities, many of them related to capital markets. He's a chief investment officer at the Financial Institution Group. And from June 15th, he will be the new head of climate finance, looking after this business globally. Over to you, Peter.
Great. Thank you very much, Carlos. It's a pleasure to be with you all today. Good morning and afternoon. It's my great pleasure to be moderating the first webinar in a series of 10, and I'm really looking forward to an engaging discussion on how and why climate investment needs to be an integral and even essential part of the COVID response. Before I begin, I'd like to extend a sincere thank you to Carlos Serrano and his team for putting this together and the other subsequent follow-on events. Let me first start with the objective of this webinar, which is really to discuss sustainability in a post-pandemic world. Our belief is that to achieve long-term recovery, it's key to accelerate the climate change and sustainability agenda as an integral part of the COVID-19 reconstruction. We'd like to share with you today how sustainable investment can boost the recovery process and allow business to boost their level of resilience for future crises. As you'll see, a key theme from today's discussion will be the importance of building in a sustainable recovery in a post-pandemic world. Before we jump into the discussion, let me share what the World Bank and IFC are doing in terms of COVID and climate response. So the World Bank Group has recently had approved a 14 billion fast-track financing package. And the objective of that package is to support economic recovery that is both broad-based and sustainable. I emphasize the sustainable. Of this 14 billion, IFC has approved 8 billion in fast-track financing to help companies that have been affected by the outbreak. Financial Institutions Group, or FIG, actually represents a large share of this 8 billion. We have 6 billion of that that's being allocated to our client companies, particularly for short-term exposure. And we're working with the clients' investment teams to include a climate angle wherever possible. So I have the pleasure of presenting and moderating this discussion, presenting our two key presenters. Let me first start with Elspeta Klein. Elspeta is IFC's Director and Global Head of Climate Business. Her role is to facilitate business growth, provide thought leadership, fundraise, and facilitate all work that's related to renewables, climate smart agribusiness, green bonds, green loans, smart cities, and other climate business areas. Also have the pleasure to introduce Per Stein. Per is a senior advisor and the IFC's Financial Institutions Group Head of Climate Finance. In this role, he's responsible for IFC's climate finance investments and advisory work through financial markets, and is supporting the leadership team in IFC's Financial Institution Group. So with those opening remarks, I have the pleasure to turn it over to Elspeta for her to share some opening remarks with us. Thank you.
Thank you, Peter. And a sound check, can you hear me well? Great.
Yes.
Okay, so welcome to everyone, and delighted to be helping to start this series of webinars with a very particular topic, the topic of green recovery, topic of green rebuild, topic of Ctrl+Alt+Delete. We're going to talk about all of this in turn. So let me start with where we are all today. As you can see, many of us are in our living rooms, sitting rooms, bedrooms, in our houses because of COVID. And what we are seeing today in the economies of developed markets and developing markets is economic crisis like no other. I'm sure those of you on the webinar know from your own institutions that this COVID will be shaping economic future for all of us for many years to come. But we also know that economies have a tremendous ability to recover, and they will recover because we have seen it time and again. The question is, how will that happen? And here's the topic that we're going to be discussing today, which is a topic of green recovery, efforts of green recovery. When everything goes bad, we are focusing immediately on saving what can be saved. And oftentimes, executives of today are forgetting to think what will happen tomorrow. But we have an obligation as finance professionals, as investment professionals, as development professionals to focus on what will come tomorrow. And I can't imagine that today we are going to do a recovery post-COVID, and 5 to 10 years from now, we will have another crisis, which is going to be a climate crisis similar or even larger than what we are facing today. So what we have today is a need to avoid rebuilding from the pandemic, only to start rebuilding again from a set of climate risks, which we have known about today, but we haven't acted on. What is a climate risk as opposed to COVID risk? Some of you may have heard about the black swans. Black swans are the events that you haven't predicted, and COVID is probably a typical black swan event, an event nobody knew and nobody expected. Unfortunately, with climate, we have something called green swans. Those are events that we know will happen, and we have enough science and data behind us that we know we have to recover from the current crisis in a different way than we built in the past. So what is a green rebuild? Green rebuild is about thriving in a low carbon economy. It's about investing in industries that can have and will have long-term growth. Secondly, it's about creating and supporting jobs. There's nothing more important today than this category, because that will lead us to economic recovery of the future. And last but not least, we know that there is a tremendous shortage of liquidity in financial markets, especially in emerging markets and frontier markets. And we know that we have an opportunity for preferential allocation of investor resources to those industries that have long-term growth and to those industries that create and support jobs. So what is it that we can do? there are two things we can do. As I mentioned at the beginning, when we are all trying to save the world and putting some liquidity into the financial system, we are generally not thinking about very long-term goals. And there we can do something called green tilt, turning towards companies that we know will be important and will survive the current crisis. These are working capital facilities that you are allocating in a credit constrained environment. And as Peter mentioned, we have a strong program in IFC on immediate response to COVID, and we are seeing how much demand we have for these facilities and how we can tilt them perhaps to industries that will be here tomorrow. And secondly, we've got medium to long term, and that's not a tilt, that's a rebuild. And that can be done in several sectors. Many of you are working in real estate, construction industries, and supporting those. We can look at green buildings. We can look at climate smart agri and a climate smart way to produce food. And we can look at various sectors that are going into clean energy. We know that there are opportunities in these sectors because we have mapped out investment opportunities in those that amounted to $23 trillion. We know there is business to be done in that space, and we think we should all be going for those opportunities. So now let me go back to why we are calling it Ctrl+Alt+Delete. So many of you know that that's how you restart your PC if you're not on iPad. And Ctrl+Alt+Delete stands for something very special. The control is that we can control the future. We can change the world that we are going to live in. The Alt is a better alternative. It's an alternative to just taking industries of yesterday and supporting them with liquidity facilities today. And last but not least, delete. Delete is a possibility to fix the mistakes that we may have had in the past. And overall, it's a reboot. Ctrl+Alt+Delete, green rebuild, is a reboot. It's a reboot of what we are doing as the world to get us on a lower carbon trajectory, especially in emerging markets. Thank you, and I'm going to pass it on to my colleague Per. Per, over to you.
Thank you, Elspeta. The COVID crisis will certainly also present a reboot for the financial services industry. Now, as we know, it provides and poses a lot of challenges for companies around the world, and we will see many businesses go out of business, and that will have a severe impact on the financial services industry in terms of credit quality, liquidity, and solvency. However, it also provides, as Elspeta pointed out, new opportunities, and it is certainly a moment for financial institutions to take strategic decisions on how they want to emerge from the crisis and where they will rebuild and grow their franchise. So why should financial institutions care for climate and the green economy? And the reason is that it will let them emerge stronger and more profitable in the years to come. And let me give you three reasons. The first one is that it is the single largest business opportunity for banks and capital markets. Even before COVID, climate change has been seen as one of the largest disruptors of the financial services industry. But what has often been overlooked, because the focus was primarily on risk, was the opportunity. And you heard Elspeta outline some of the points of that opportunity. For 21 of the largest emerging markets, we see an investment opportunity of at least $23 trillion until 2030 in renewables, transportation, green building, energy efficiency. And while some of those opportunities will certainly be on hold because of the crisis, we will also see others accelerate because of crisis response packages, because of shifts in consumer patterns, as well as in continued trends in technology that we have seen over the years. So that's the first reason. The second reason is that it is one of the fastest growing business segments for banks and capital markets. And in Latin America, because Carlos, who invited us for this event, and Marcela, they've been leading our work in Latin America, and this is also where the Green Banking Academy, which you will see in my background here, has started. In Latin America, banks see growth rates for climate-related lending well above 50% per year. And many of you certainly have seen the green bond market evolve now as one of the fastest growing asset classes for capital markets. And based on the industry trends across the largest emerging markets, we expect climate-related lending to grow 4 times as fast as conventional lending over the next decade. And that will lead to a shift in loan books from about 7% of climate-related loans as a share of total loans before the crisis to about 30% by 2030. And the third reason is that we see at least the same or better credit performance for climate-related assets. In fact, based on IFC's latest financial institutions review, 95% of our client banks state that climate-related lending is at least as good, if not better, than comparable conventional lending. And this has also been confirmed for different asset classes through peer-reviewed publications for green mortgages in the US and the UK, green commercial buildings, but also by studies that financial institutions have done, like for green small business loans in Eastern Europe, just to name a few. So here you have it, 3 reasons why we believe that banks will and can emerge stronger and more profitable out of the crisis by focusing on the green economy, because it is the single largest business opportunity. It is one of the fastest growing market segments, and it presents good asset quality. And let me end with one example. Of course, we are just a few months into the crisis, and we will certainly be staying with this crisis for a bit longer, so it's hard to give you a fresh example out of the crisis, but we have a very good one of a bank that has done this shift and embraced that transition in equally challenging times. And this example is Ukregas Bank in Ukraine, which has managed that transition in the midst of a war and a very deep economic crisis. Ukregas Bank is the 4th largest bank in Ukraine and on the way to be privatized. And 3 years ago, IFC signed an advisory agreement with Ukregas Bank to help the bank become a market leader for climate finance in the country. And since then, Ukregas Bank has rebranded itself as a green bank, has lent over $800 million for renewables and energy efficiency, and is on track to have 1/3 of its loan book to be climate related by the end of 2020. All of this while having significantly better credit performance for this new asset class. So just one example out of many others, but probably a good one to show that even in very difficult times, it is possible to embrace it. And in fact, I would argue it may even prove an opportunity that should not be missed. Over and back to you, Peter.
Great. Thank you, Per, and thank you, Elsbeta, for those opening comments. Now let's turn and do to some Q&A. I'd like to pose the first question to Elsbeta. And that question is, why do we need to rebuild green when our clients, companies, and our markets are facing severe shortages of working capital, trade finance, and liquidity overall? Shouldn't we really be saving them first before we consider a green rebuild? What are your thoughts on that?
Thank you, Peter. You probably read the minds of a few people in the audience, because I hear this question quite a bit, especially over the past few weeks. You're a banker, you're facing a company, a client who is running very low on funds, where working capital lines are being stopped. What makes you think about supporting this company as opposed to another company, and why should you be thinking about a green rebuild? So here is a story. The story is that funding is constrained. Funding is constrained because there is not enough money around the world to save every single company. What we are seeing in developed market is that COVID packages are reaching 10 to 12% of GDP. And we know that even with that kind of amount, we are not helping every single company. We have also seen that in emerging markets, those bailout packages were in the order of 2 to 4% of GDP, depending on a country. And again, we know that this is not enough to help everyone. And so when you have an opportunity to save some companies, but not all, you have an opportunity to triage what you want to do and how you want to see your portfolio of the future. What is it that you want to do? And when you look at the state of the world today, for example, with the oil price where it is, there is no good reason why there should be subsidies on petrol, on gas, at the gas station for the consumer. With the oil where it is today, there is no good reason for fossil fuel subsidies. So why would you be helping fossil fuel companies that are facing difficulties, obviously, but the future does not go there. The future goes into renewables. And going back to what we have as an environment today, in a very constrained credit environment, you as bankers, you have a choice. We as bankers, we have a choice. We all have a choice to fund companies that are going to be there in the future. The second and final point is that what I said earlier about jobs. When you look at how many jobs we have in, say, clean energy industries as opposed to coal industry, pick pretty much any country in the world, and there is probably one exception. In every other country, except for this one exception, which some of us know, jobs in solar industry by far outweigh the jobs in coal industry. And we know that that is the industry of yesterday, and solar and renewables are the industries of tomorrow. So when you look at the jobs agenda and when you look at constrained credit environment agenda, it leads us to believe that in the times of ultimate panic in a market, which we have observed over the past couple of months, you actually can focus on our priorities. Thank you, Peter.
Thank you, Elzbieta. So next one over to Per. So Per, what does it take for banks to grow their climate-related business? And wouldn't that be even more difficult during this crisis?
Yeah, thank you, Peter. And I think that follows nicely also to the question for Elzbieta. So certainly what we have seen in our engagement with banks to help them grow this line of business, and we've worked with over 100 banks and financial institutions across emerging markets, is that one of the key ingredients is a high-level strategic commitment to this agenda at board and management level, and a clear articulation of the business opportunity, right? And we have just outlined what that business opportunity looks like across a number of markets, but of course, this is very specific for the countries that you are operating in. So there's a lot of groundwork that has to be done to understand how it relates to your country, but then also to your client base, right? And I think that typically is also the best starting point, right? And as banks, and this goes to the second part of your question, as banks have to review how their clients are doing in this crisis, I think this is the moment for them to also assess how are they set up going forward in terms of their growth prospects over the next 5 to 10 years, right? And there will be hard decisions to be made, right? Because as I mentioned at the beginning, not all companies will emerge successfully out of this crisis, right? But our fundamental belief and the evidence that we've seen so far supports that is that many of the businesses that will succeed and will emerge successfully out of the crisis will likely relate to the sustainable and to the green economy. So this is the moment to really include that filter and that assessment dimension as you are looking at where to grow or where to continue supporting your business and then to grow your client base in the future.
Great, thank you very much, Per. So let's turn it back to Elzbieta. And Elzbieta, I'd like to ask a follow-on question to you on what are the sectors that we should focus on in helping to rebuild green, and what are the most obvious green investment opportunities for commercial banks in emerging markets to engage in?
Peter, great question, and it follows on what Per was saying about which companies are going to be around and which companies are not. So let me describe an ideal scenario, and then we go back to reality. Ideal scenario, obviously, and especially for emerging markets, is to support sustainable infrastructure. Why? Because infrastructure is the cornerstone of any future growth in economies. And infrastructure and building it sustainably means that you can build for the future, you can build for tomorrow and for day after tomorrow. Now, having said that, those projects take a long time to develop, and we don't have that time. So what are the projects that are shovel ready? What are the projects that we can do today that will be easy to scale, easy to do? And one of those is green rebuild of real estate. We know that offices of tomorrow are going to look very different from offices of today, and a quick type of transactions that you can have as bankers is green real estate. You can green your stock, you can make it more energy efficient, you can bring operators that are going to be operating them at lower cost, and you will save money to future occupants of these buildings. That is something that is shovel ready and ready to go. But longer term, it is infrastructure. The other sector that we're seeing that is actually quite resilient is the agribusiness sector. So what we are all observing is that despite the crisis that we are all going through, all the countries are going through, and despite the occasional shortage of a particular food ingredient, such as flour here in the United States or something else elsewhere, agri-market has actually functioned quite well, and agri-companies have been remarkably resilient. So what would it take to get them into climate smart trajectory? And I know there are a number of bankers from Latin America in the audience. You are financing a lot of those companies. What would it take to do it climate smart? What would it take to move them just one step further in that chain towards low carbon development? So those are just two immediate ideas that we have seen have been both resilient and ready for transformation. And just like everyone else, they are in a credit constrained environment and need to be supported. Thank you, Peter. You're on mute, Peter.
Peter, go ahead.
You are on mute, Peter. Oh.
Peter, you're still muted. Yeah, now I think it should work. Go. Try it now. No, it doesn't work. We lost our moderator.
Okay, well,
do you want to jump in?
Yes. While Peter connects, I think I would like to throw some questions here to Azbeta in this case. And I would like to know if, Azbeta, are there any specific products that have been launched by IFC to fight the crisis caused by COVID-19 specifically? And how are these related to sustainable business that you are promoting?
Thank you, Carlos. So as Peter mentioned at the very beginning, we have actually launched a number of initiatives in the financial markets that are trying to stem the outflow of liquidity. And I'm actually going to ask Per to talk about it in more detail. But there's one particular initiative that I would like to highlight, and that is that in the middle of the crisis, in the middle of the thick of it, we have actually done a third closing of a fund which we put together with HSBC Bank called Regio, which is a fund that will invest in green bonds issued by companies in real sector, in real economy, so by utilities, by agribusiness companies. And I just like to highlight that this has happened 2 weeks ago, literally in the middle of the pandemic, and we have found investors, actually close to $500 million of funds that are willing and ready to invest in green bonds for real sector in emerging markets. So that appetite of investors, Carlos, has not diminished, and it's really, really good to see. But I'm going to pass it on to Per to talk about detailed facilities that we have put in place already. Per, over to you.
Yeah, so as you pointed out already, and also as Peter mentioned at the beginning, our initial focus in the crisis has really been to address liquidity issues of banks, right? So the programs that we've set up for our banks have been focused on working capital, trade finance, and other short-term financing options that we're rolling out in record time and really at a scale that we have never done before. And those facilities do incorporate climate components as well. But of course, the longer term opportunity is the one that I think will be even more important. And that for us is the next phase in our recovery support to banks, where we are looking at a broad range of instruments, including capital and capital-like instruments to support banks in greening their operations, but also through our tools of longer-term financing, risk sharing, as well as incentive mechanisms and advisory that we provide to banks to help them grow that business. And I see Peter's back. Shall we do a sound check whether we can hear you too?
Yeah, hopefully. Does this work now on the sound? Okay, very good, very good. I had to sign out for a moment, so if the question I posed was already posed, please intervene. Elzbieta, have you talked about the specific products that have been launched by IFC?
We touched on it, okay. Yeah. You can move
on. Very good. So let me ask instead about, from your perspective, what are the key differences between the recovery in developed countries versus developing countries?
Is it to me or to Per? To me?
To you.
Okay, great.
Per can certainly chip in as well. But.
Right. There is going to be quite a different approach to it, and what we are observing here is that in developed economies, nobody is expecting a V-shaped recovery anymore. V-shaped being, plunge down and a very quick climb up, because the fundamental growth in those economies has just not been that high to start with. Where we have an opportunity for growth is the emerging markets, because we have seen, even though the growth has not been a double digit over the past few years in many emerging markets, it has been substantially higher than we are seeing in developed markets. Another reason, and especially for bankers in the audience, it's going to be very clear, the operations that are fundamentally manufacturing or fundamentally physical continue to produce EBITDA, continue to produce revenues, maybe not profits at this point, or some profits, but definitely producing EBITDA, whereas service industries have pretty much stopped for obvious reasons. And so when you have an economy which is overweight in services, you're going to see a lot of companies that have to fundamentally change their business model. What we are seeing in many emerging markets is that there is a base of manufacturing, there is a base of agribusiness, there is a base of real sector that is actually continuing to grow. And again, it may not be the most profitable at the moment, but it's definitely, those are definitely companies that continue to produce EBITDA even in this difficult environment. So I think those are going to be the two big differences between developed markets, which are primarily service economies, and developing markets. Maybe Per will add?
Yeah, no, I would agree with that assessment. I mean, what we do see is that some of the developed markets in their recovery package put an emphasis on the green economy, like Europe, right, which has put a big emphasis on this, or is putting a big emphasis on this. But of course, when we did the assessment of the investment opportunities, I think we do see a big shift that the majority of climate relevant investments are going to happen in emerging markets, right? Largely as a result of the continuing trends in urbanization with the related infrastructure needed. We talked about green buildings, but also transportation, waste, water systems, as well as, of course, the underlying energy infrastructure with the required investments in renewables and the like. So it's clearly to see that the dynamics for emerging markets now show a far greater opportunity, as I outlined earlier, for this space. And when I said that bank portfolios will shift towards climate-related lending, right? And you see a relative growth from 7% to 30%. The absolute growth that we expect is an almost tenfold increase in absolute dollar value for climate-related lending, right? What we estimated for the G20 a few years back was that current exposure for climate-related lending of banks to be around $1.5 trillion. We expect that to be at least 13 or 14 trillion dollars by 2030, right? So the absolute growth is staggering.
Great, thank you, Per. I have one or two more questions, but Carlos, I also wanted to open it up to any questions that have come in from participants that may have been shared with you. So make sure we have time to cover those areas.
Thank you, Peter. I think that Marcela has been collecting some of the questions, so over to you, Marcela.
Sure. Thank you, Peter, Sveta, and Pierre. So we have a couple of questions from our participants. Just to say to all our participants that we have time for clarifications, questions. So if you have anything, please do send it by the Q&A box in the WebEx. This first question comes from Nidal Mahmoud, and he wants to know, how does IFC define resilience for existing assets? And how does adaptation to climate change and similar physical shocks play a role in the institution's green post-COVID recovery strategy? He said that today's discussion has mostly focused on new assets and opportunities, but he wants to know more on that side for resilience. Maybe we'll start with you, Sveta.
Yeah, Marcela, I was just about to jump in. I'm happy to take it on. So as the person who asked the question rightly points out, resilience is not only something that was born today because of COVID. Resilience is something that has been a topic of discussion for a very long time. But having said that, it gained prominence, tremendous prominence because of COVID, because our systems, whether physical systems, whether social systems, whether medical systems, you name it, need to be much more resilient. And we just found out during this COVID that is the case. So what are we doing at IFC? A couple of things. We started working on the resilience of our own assets back in 2011. So it's been quite a while. We have developed detailed business models for 7 key sectors. Those are the sectors that are obviously the most vulnerable. So forestry and ports and airports and others. And for the past couple of years, we have been applying resilience screen for those key sectors. Now, climate risk is something that shows up unevenly, right? So you've got industries that are very exposed to it, and then you've got a bunch of assets that are probably going to have a lower risk. So our strategy has been to focus on the most vulnerable assets and deal with those. Having said that, we have been the first multilateral to do TCFD disclosure, task force on climate-related disclosures. We have a bit of a noise on the line, okay. And we are continuing to enhance the disclosure on climate risk as we go forward. So we are preparing right now our 3rd TCFD annual report, and we obviously plan to develop this much more substantially going forward. Thank you.
Thank you, Sveta. And just building what you just said, this question comes from Juan Forero from the French Development Agency. How can we strengthen climate-smart agriculture now that the supply chains are being strongly affected by COVID? I think there is a sense in the market that there is a big push to relax environmental practices as Sveta and regulations, and deforestation has significantly increased during the global lockdown. So how do you see that?
I think we have a toolbox in our hands, and that is finance. Increasingly, investors are looking to invest in companies that are doing the right thing, irrespective of the current crisis. And the tool that we have in our hands is financing. So when you're making your own investment decisions, you can decide which companies you want to invest in and which companies you're going to skip. And so obviously environmental due diligence and proper due diligence on all the considerations that the company should lead us to make better financial decisions. We have had a lot of dislocations in the market because of COVID, because of the lockdown. So we're going to see strange effects on many things. We have seen decrease in emissions, obviously. We have seen some increase in practices that we haven't seen in the past in a while. So we have seen the positive, we have seen the negative. As we are emerging from the crisis, I think this particular audience, Green Banking Academy audience, has a tool in their hands, and that is their investment decisions, both investment decisions that you make as bankers in your day job and investment decisions that you make as investors in your private portfolios. You have a choice.
Absolutely.
Yeah, maybe to add, Marcella?
Yeah, go ahead, Per.
Yeah, I mean, of course, this is something to watch carefully, right? As Alsbeta pointed out, there are the crisis has led to big dislocations in supply chains, right? And so the question is, how will they come back together? Will that lead to less or more ESG compliance and focus? I think that's a question. I think some companies may take that as an opportunity to move it further into this direction, right? I mean, many of you have seen the commitments that large corporates have made to sustainability in their supply chains, whether that's in alignment with SDGs or whether that's with respect to energy and climate targets. And as those programs have been implemented with suppliers, as you reconsider supply chains, there's always an opportunity to make progress towards those goals that have been stated as well. So I would put that in there. And then the second point is, on the financing side, which I agree with Alsbeta is one of the most powerful levers here, I don't see a relaxation of standards, right? I mean, it has been in the middle of the crisis that the Philippine Central Bank published its sustainability guidelines for the industry. So I don't think necessarily that we yet see a slowdown of that. And also, the Network for Greening Financial Systems or the Sustainable Banking Network and others see a lot of demand, continued demand for this topic. And so I don't fully see that may be slowing down.
Thank you, Per. You did touch on something before that is very close to the heart of many participants from the banking sector here. This is a question from Teresa Parejo, and she would like to know your views on if you think that banks are willing to help their transition to a more efficient industry. It is especially important at this moment, given that they are running out of cash. Therefore, it is even more difficult for them to make the necessary investments. I think that you did touch upon that, but if you can just refresh your views on that.
Right. Well, I think there will always be leaders and laggards in the financial services industry, with respect to different aspects. But as I pointed out, I think for a bank, it is a wise choice to focus on climate business in how they want to emerge from this crisis, right? Because it is such a large business opportunity, because it is growing much faster than the conventional business. So it helps you, rebuild your business, and it typically provides for sound credit quality. So I think regardless of how deep your troubles are, right, you will have to pose your questions. Will you get through that crisis? And if you do, then where will you be in business, and what kind of business will you support, right? So you anyway have to ask yourself that question, because you will see companies not making it. I hope I was convincing in making the point that climate will help you make good decisions for a bank.
Thank you, Per. Just one more question. We have a lot of questions, so I'm going to try to squeeze in as many as I can. We have an audience from Asia, and they're interested in knowing a little bit more about how Asian countries address the sustainable green business, as their internal resources and funds are too limited and depending on budgetary support from the multilateral institutions. And the other question related to Asia as well is, what initiative has IFC taken or is planning to take to promote climate financing through banks in East Asian countries? This last question is particularly about Bangladesh, if possible.
Why don't you start on this?
Yeah, so to the first question, what we do in Asian countries to support this. So our typical tools include both investment and advisory services that we provide to financial institutions. And this is what we have also been focusing on now in the crisis. We talked about the short-term instruments that we're providing, but are indeed more geared towards liquidity of banks. And those are heavily rolled out in Asia as well, but it also includes, of course, longer-term financing and engagements with clients that we support there. So a lot of our work has focused on the integration of banks and capital markets, so helping banks establish green bond frameworks, tapping into capital markets with those green bond issuances, and also mobilizing institutional investors into the space. You heard Elzbieta talk about the Regio Fund that we've launched with HSBC. We've launched earlier the Green Bond Fund for financial institutions with Amundi. We've supported a number of collective investment vehicles like the Global Climate Partnership Fund and others to really support that industry, and often through financial institutions. We're also exploring new instruments. So we are looking at the opportunities around blue bonds. We are supporting clients in their path on how can they support transition financing through respective instruments of transition bonds and loans. And we're also looking at sustainability-linked bonds, so where the use of proceeds may not be directly linked to climate-related assets, but where targets are set for the whole financial institution to become more green and climate-related. So these are just a few examples, and of course, Asia is one of the most dynamic regions in this space, where a lot of the work in terms of asset classes on green buildings, electric vehicles that we finance, of course, renewables, transportation systems, and so on is quite large.
Thank you, Per. I think that also answers questions that come from Black, and I hope Alejandro Caicedo, that Per's response also helps with your question about what IFC is doing in mindset changing of the banking industry towards green investments. So I'm just gonna follow up on one of the points that you have just mentioned, Per, regarding electric vehicles and immobility. So Juan Reyes asks, what is your view on immobility for the future? Due to COVID, many transportation systems in emerging markets are struggling and can postpone their e-plans.
This is a question more for Elzbieta, no?
Go ahead, Elzbieta.
I can start on that. So e-mobility, actually, I'm very proud to say that IFC hired its first e-mobility specialist about 4 weeks ago. And obviously he joined us virtually because he cannot travel to his place of work. But we're actually putting a lot of thoughts into e-mobility. And I don't think COVID is going to have a huge impact on that. In fact, it probably will have more impact, better impact than we expected. In e-mobility, what we are observing is that there is a stream of investments in modernizing buses. And that is something that COVID will probably impact, because the willingness or ability to take public transport is going to be questioned. But there is one segment where we have seen growth, and that is commercial vehicles. Commercial vehicles continue to deliver. And actually, if you look at your COVID deliveries, especially if you live in more developed part of the developing world, or if you live in United States or Europe or parts of Asia, you know that you're getting more deliveries. So those commercial vehicles that are going to be running on batteries are going to be actually more relevant than any other time before. So we are putting our bet. We brought our first specialist on board, and we're going to be developing several lines of business. One is in cities, obviously electrification of fleets within cities. Second one, personal e-mobility, which probably will pick up at some point, not in not so distant future. And third one is the supply chains. In order to grow this business, there is a number of components in a supply chain that will need to be financed to be able to grow this. So those are the three areas. So I actually don't think it's going to be impacted negatively. Rather, we're probably going to be stagnant for a bit and then grow. Back to you, Marcela.
Thank you, Elzbieta. One more question, and I'm going to try to link that to your answer, Elzbieta, and how we can convince countries of the importance of cooperation through multilateral institutions like IFC in a post-pandemic world when developed economies are pulling back from high-profile institutions like the World Health Organization and previous climate initiatives. And that can also be tied to something else, I think, about blended finance, and how do you imagine blended finance to be part of the green rebuilding, and how the emerging market banks can support these kind of initiatives. And those come from Paula Osorio in the chat.
Thank you, Marcela. There is another question in the chat about blended finance as well, which came a little bit earlier. So happy to address that. So I actually think that blended finance is going to continue to be part of the equation, and it's going to grow. And let me tell you why I think what I think. So in the past, when public finance was relatively plentiful, you could see a lot of funding going into grants, a lot of funding going into sort of direct subsidies for many industries. When you are living in a constrained environment, as I mentioned, with 10 to 12% of GDP rescue packages, a lot of public purses will be significantly stretched, especially in donor countries, in countries that generally support development in emerging markets. And so there is going to be an emphasis to get the biggest possible leverage for every dollar or every euro of public purse. And we know in IFC that depending on a sector, we can mobilize between $7 and $14 for every single dollar of public funding. And so it's going to be absolutely critical to take those public funds that are still available and stretch them as much as possible and multiply them so that they can achieve more. And instead of putting straight grants into a number of programs, we are going to be looking at blending them with private sources of money, private sources of funding, and hopefully delivering the same level of impact. So I actually think that a lot of donor countries will be rethinking climate finance, rethinking how they want to blend it, and will be asking multilateral development banks to blend more efficiently with a higher catalytic impact. Thank you, Marcela.
Yeah, Marcela, and maybe I can briefly speak to the first part of your question, right? Why should emerging markets engage in this, right? If when we see even developed markets pull back, and I would argue that emerging markets have been remarkably interested in the agenda for a number of years. You may, I mean, some of you know that we've helped establish the Sustainable Banking Network in 2012 with both banking associations and banking regulators. And I believe that Giorgio, the chairman of FELABAN, the Latin American Banking Association, is on is here on the line as well. And that has been a very powerful network for peer learning amongst regulators and banking associations to advance the agenda for sustainable finance. So much so, when the G20 established its green finance and then sustainable finance group a few years ago, that the countries representing emerging markets, Indonesia, China, Mexico, and so on, were actually much more advanced on this agenda than many of the developed markets were. And this is why it also took a bit longer for the network for greening financial systems as the network of central banks from OECD countries initially to get started, right? And so I believe that this interest is founded in something that I think will not abate in the COVID crisis, and I alluded to this earlier. The debate in developed markets when it comes to climate is mostly about risks. In emerging markets, that debate is also about risks, because obviously there are vulnerabilities, and we've heard about resilience to climate shocks, but it's in particular also about opportunities, right? The huge opportunities needed for the development of those economies, right, in light of urbanization and everything else that is happening. And I think that will keep emerging markets at the forefront of this debate, and I don't think that this will abate or be reduced because of the COVID crisis. If at all, I think it will go the opposite direction.
Thank you very much, Pierre. I think that we need to start wrapping up. So I'm going to give the floor to Peter.
Great, thank you, Carlos. I'll make an attempt at wrapping up. It was a very rich and broad discussion. But my key takeaways from this are that the COVID crisis has created an opportunity for climate finance. And that opportunity is to lead and integrate climate investment into all these funds that are going to come as a result of the crisis. There's going to be huge stimulus from governments. There's going to be huge amounts from DFIs. As I mentioned, IFC is already targeted 8 billion. The World Bank Group over the next year is looking at over 100 billion in financing across all sectors. And of course, the private sector will play a role in the recovery to COVID and the importance of the tilt towards green versus non-climate friendly investments. I really like the example of coal versus solar, and that is actually a greater generator of jobs in the solar industry than the coal. So why are we doing this? Well, we're doing this to avoid the longer term crisis that can come if we do not take action to reduce greenhouse gas emissions and take advantage of this climate investment opportunity. In terms of where we're seeing this opportunity, it's really across the spectrum. It was discussed infrastructure, buildings, energy efficiency, and even e-mobility. Per highlighted the investment opportunity in emerging markets of $23 trillion, which is enormous. The benefits of doing this, of course, is to reduce emissions, increase jobs, as Elzbieta was saying, and the fact that these assets have a higher, better financial performance than non-climate related assets. So we see this opportunity, we understand the reason, but the question is, how do we finance it? How do we stimulate that finance? And really, there's going to be two sources. The first is from banks directly, and the second is through capital markets. So in terms of banks, Per emphasized the importance of the business opportunity and that these can be very profitable. A bank can become more profitable by targeting this segment because of the growth potential of climate investments, and the performance is typically equal or better than non-climate. He commented on the importance in the banking sector of our network with SBN and how we partnered with them to foster and promote a green climate agenda in each country. The second part of financing is capital markets. So they, in some cases, in some countries, can even be a larger source of finance for climate finance because capital markets can mobilize vast amounts of money through institutional investors. So in that area, IFC has done multiple funds. We're going to look to do more climate funds, promoting and launching green bonds, blue bonds, transition bonds. So there's kind of a dual financial response to this. Just to close out, I mean, I love the reference that Elzbieta made to green swan and contrasting that with black swan, which is COVID, because the green swan is this green opportunity, this opportunity to rebuild green. And the reference to Ctrl+Alt+Delete was also very appreciated. We have We have the ability to control our future by using alternatives to what we have today, fix any mistakes of the past, to reboot, and to put us on a lower carbon trajectory. So I think that's a great call to action for a green rebuild, not just in emerging markets, but globally. So I will conclude there. And again, I wanted to thank Marcela Ponce and Carlos Serrano for organizing this event and bringing us all together. I look forward to working with you in my new role, stepping in for Per. Thank you very much, Carlos.
Thank you very much, Peter. And before we go, I would like to announce the next IFC Green Banking Academy webinar that will be held on June 4th at 10 a.m. Washington, D.C. time, 4 p.m. Madrid time. Please join us, because if you're expecting a banker like today to talk about green rebuild, this time won't be the case. This time we are going to have a very special guest, who is Professor Álvaro de Rújula. De Rújula is one of the most important theoretical physicists of the world and former leader of the theory division at the European Organization for Nuclear Research, known as CERN, the international laboratory between France and Switzerland. And he's also a member of the Institute of Theoretical Physics at the University Autónoma of Madrid. Álvaro has been, as I tend to simplify, not only investigating the origin of the world and discovering things like the Higgs boson, the elementary particle in the standard model of particle physics, but investigating many more things and promoting basic investigation as something of the most relevance for sustainability and for a green rebuild. So please join us. We expect you on June the 4th. And a last thing from you, please, you will be receiving an evaluation form by email, and we will be very grateful if you can share your suggestions and ideas with us. Thanks to Alzbeta, to Peter, and to Marcela, and to our entire team. And of course, thank you to the 300 participants that have been connected to this webinar. We look forward to seeing you again in the next one on June 4th. Thank you very much, and have a great rest of the day, all of you. Thank you.